Now, as ET Now turns 7, we bring you the biggest voices on Dalal Street. Watch Reliance Capital's Madhusudan Kela Shankar Sharma from First Global, Akash Prakash from Amansa Capital, and JP Morgan's Bharat Iyer share their market wisdom that will help you grow your wealth.
Today it is Brexit, 1 year back it was oil
Brexit,
prices, another 1 year back it was European Union disintegrating. You see, India has a story of its own. We have to recognize that this is a country which is still offering 7-8% growth. This is where earnings are still growing for corporates at 10, 15, 20%. So I don't know where the index is going to grow. I only know there are still a lot of businesses and a lot of companies which will make a lot of wealth. The only question is this undiscovered as a story or a country? And how do you take advantage of it? So the way we take advantage of it, whenever there is a panic, let's supposing there is Brexit which happens, is the world going to come to an end? It is not going to come to an end.
Yeah.
So if the market falls by 5-10%, that is the only opportunity which you have now. The entire this consumption, because we still have 120 crore people, and I'm not referring to companies which are like 50 p on consumption. I'm saying there is consumption is of various types. So this is one thing which will continue to do well, because people will end up consuming, and with now you have 7th pay commission even in the near term, that will boost up things, because it is reflecting the lending for people and to the people who are actually becoming richer by the day. So that remains one paramount big theme, And within that, we like urban consumption more than the rural consumption.
We are a market, we are a good country, not a great country. We are hopefully going to become great. So if something bad happens to the world, we also get hit, unfortunately. I think India might suffer a tad less, because India typically suffers a bit less in meltdown situations, because I think a macro and a micro both are relatively not that risky. Indian small caps, Indian micro caps, Indian mid caps are the single best equity asset class in the world, bar none. And I think, in February you saw many of them crack 20-30%, and I think we had a call around that time in the markets.
Been retracted as well, yes.
Correct. And I said that I'd be going out and buying something that I liked last week and is down 30% this week.
So
and all those stocks are up, I think at least twice from those levels. So I think let's wait for that to happen. If it happens, I think again you'll be presented in these smaller names a great opportunity to go back and buy some more. I've liked small cap chemicals, I've liked small cap infra, I've liked small cap financials. And remember, small cap don't necessarily lend themselves to a particular sector. They can be just a small cap without belonging to any particular. So there are a couple of names which again, have done quite well. I think they will do well. But sectorally, these sectors, I like, and I think if they were to sell off 20-30%, as they might, it can very well happen. So I think metals have had a good run. I think they will continue to do well, but I think the easy money in that trade is over.
In India especially so, you have to invest in quality businesses and franchises. I think the problem today is any company which has a good track record of quality and profitability is very expensive, right? So, there may be some which are off the radar which we don't know, but by and large, right, are the well-known ones. I think Infosys will make the cut. I think that, Mr. Sikka has been very early. He is a visionary on technology. He seems to now have really charged up the organization. The feed scuttlebutt we get from the company is that there's a lot of enthusiasm, momentum inside the company. I think they have a good shot. Chandra clearly have an outstanding track record. I think TCS will make it. The feedback we have is that they are again they're maybe more quiet, less vocal about it than Infosys, but not doing anything dramatically less or in no way inferior to Infi. These two I'm pretty confident will make the cut. The rest, frankly, I don't know. I think one or two smaller companies which today we don't talk about or we don't even know will make the transition. Will the middle make it? I don't know. If you look at Mahindra Finance, right, when we bought it at below 200, it was in hindsight reasonably simple. It was just a simple argument saying that rural India has gone through massive stress. You guys have NPAs of 10.5-11%. We've seen this story before. It's happened twice before in the last 12 years. The cycle will turn. If the cycle turns, they're incredibly well positioned. And we also believe that if you look at what the government's trying to do in terms of improving agricultural income, it's massively positive for rural consumption and economy and stuff like that. I think over the next 5 to 10 years, there will be a strong tailwind for India, right? Across sectors, across companies. What we need to focus on is trying to identify the specific management teams and companies which will take full benefit of that tailwind.
The way we look at the private sector banks is, along the lines you've said, we've, segregated it into two segments.
Okay.
On the one hand, you have the high quality retail franchises, and on the other hand, you have, the banks with a lot of corporate exposure, which are going through some stress. At this point in time, we actually are, following a bit of a barbell strategy. What's going to happen to the stress pact is, I think there are very good opportunities over a 1 to 3 year time frame. Because the valuations are very attractive, and in a growing economy you'd expect them to sort out most of their issues, but timing this is going to be difficult. So you buy in there. I mean, as I said, we have 33% of our money there, but we are not willing to go the whole hog there. We want to see more more stability as far as the credit cycle is concerned before we up our weight there. You've seen a pickup over the last 12 to 18 months in terms of volumes. An early cycle, volume pickup is always going to be rather aggressive. So we've seen volume growth in excess of 20%. But I'd argue that going forward, there will be drivers, because one, I think the national highway project that the government is executing, I think that's something that's very, very positive. And that is a project where we have visibility for 3 to 5 years, which should keep demand going. You'll have a growing economy, which will again continue to push the demand for for freight. And last but not the least, we also need to appreciate that most of the commercial vehicle names are building up a very good business in the defense area.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.